Welcome to the Economy and Politics Conversation. I'm Ottoabasi Abasiekong. This edition will discuss the 2025 outlook for Nigeria's oil and gas sector. Joining me virtually for this is Mr. Chukwuemeka Osuji, Energy Analyst, Olaniwun Ajayi Legal Firm. Nice to have you on the program.
Thank you very much, also. Let me just use the opportunity to say Happy New Year to all the viewers.
Yes, Happy New Year to you too, Chukwuemeka. And of course, we're discussing what is the mainstay of Nigeria's economy. Hopefully, when we have more diversified revenue sources, we can look at them, but oil and gas still remains the big thing. And let me begin by asking you, when you look at the developments, of course, we're in New Year, your understanding of the global trends that will shape oil and gas industry for 2025, what will be those trends?
Well, in terms of the global trends, a few quickly come to mind. So the conflicts in the Middle East is something that's out there, as well as the conflicts between Russia and Ukraine. The conflicts in the Middle East, even though there's been strong attempts to resolve that, but we don't see that being settled anytime soon. So those conflicts will continue to create a bit of uncertainty, and really it's just about uncertainty, about what positions some of the more allied nations will take. And that would then begin to have, even if it's a direct impact on the prices of crude oil. So it's not necessarily the case that we can predict that we'll see either a bullish run or something on the negative side, but that uncertainty will continue to play out. So even though the oil prices have been a bit steady for a little bit now, but given those conflicts and a couple of all other pressures that are being exerted, we think those things are some of the key determinants of that. As it relates to production from a couple of the OPEC countries, I don't think we're going to see any significant differences. Production quotas will continue to be consistent, as it's largely been for most of 2024. So I think it's largely the conflicts that will, at least for the first 2 quarters of 2025, that will largely impact what we'll see in terms of crude pricing. For other dynamics, energy transition discussions will continue to happen, but we don't expect to see any significant changes from what's been going on. A few countries will, of course, continue to make progress. Nigeria will continue at our own, and other African producing countries at our own trajectory. So I think the conflicts, the energy transition debate are, I think, some of the key factors that I think will impact on pricing at the moment.
Yeah, and I was watching one man who, of course, will be sworn in by 20th of this month as the president of the United States of America, 47th return of President Donald Trump. And he said drilling is going to be key. So he's a pro oil and gas person. You see that also influencing developments, Chukwuemeka?
Well, to a little extent, even if the US ramps up drilling, they have their own strategy. Most of the developing nations, in terms of, the producing developing countries, our own strategy is just to drill, export, and make money, but not necessarily the case for the US. Sometimes they engage in a bit of reserve management, even sometimes when they're drilling. The markets where they channel, they produce crude, what you think they'll be doing is not actually what they're doing. So yes, we will expect to see an increase in rig count, for example, in those areas. So even in Nigeria in 2024, we began to see an increase in rig count, and we expect to continue to see increases in rig count in Nigeria for 2025. A good number of the rigs in the market, not a lot, are already almost fully committed. So that will continue to happen, more exploration activities. But there won't be significant dramatic change in terms of the supply or the demand pressures in the market.
Chukwuemeka, we've had this conversation before, but there are several perspectives on the unbundling and financialization of the Nigerian National Petroleum Company Limited. Remember, it used to be a corporation, but it's transited to a company limited. We've seen at least some release of figures, financials, which we've been claiming for more accountability and transparency. But there's a phase everybody's anticipating, and that's listing on the exchange, Nigerian Stock Exchange or the Nigerian Exchange Group and other global exchanges, as we've seen with Saudi Aramco, a very good example, creating value for Saudi Arabia. This is long overdue, and we've had this conversation before, Mr. Chukwuemeka. What is the delay? I know you raised the concerns about being ready for the market. So are we saying that the NNPCL for now is not ready for the market, or is it ready for the market? So those 2 parts, yeah.
In terms of readiness for the market, and coincidentally, I and my firm, we worked on the transitioning of NNPC, the corporation, to
Yes,
who
yes,
actually set
yes,
up
yes.
the NNPC Limited. So we have a bit of an intimate understanding of what's been going on that side of things. Going to the
Yeah.
market, and I think it's also important for people to remember, NNPC Limited sits at the group level, yes, but not all the commercial entities or all the money-making ventures in the NNPC group is NNPC Limited.
Okay.
So we're having a
Okay.
discussion about floating the shares of NNPC Limited. Are we talking about just NNPC Limited or the subsidiaries of NNPC Limited? Presumably, it's just NNPC Limited.
That's where the unbundling may come in. Like, yeah. Okay.
Exactly. While the subsidiaries will continue to operate. You'll also remember that the PIA has set a framework where it provides sort of a platform for NNPC and its UJV partners, I mean the unincorporated joint venture partners, to translate or transit to IJVs. That's incorporated joint venture partners. That means they'll be setting up distinct companies that will then own all those assets. So it's within this entire interplay that this question has to be answered. Is NNPC ready? For me to answer directly, I can say the answer is yes. NNPC is ready to be floated. NNPC can be floated. Is this the optimal time to do so? Is now another question altogether. And the answer to the question whether this is the optimal time is a combination of various things. I'm not a market, I'm not an economist, I'm just a lawyer. But I think when you look at other key factors, for example, how is the Naira performing at the moment? How is our stock exchange performing at the moment? What is the likely appetite of investors, both local and international, to pick up, this high volume of shares on the market? And in terms of the strategic objectives, are we now prepared to transit to that region where a significant portion of the shares of NNPC Limited is held publicly, subject, of course, to the rules of the PIA, which is it has to be through an open, competitive bidding process. That also has to take place. So is this the optimal time to do so? Or does NNPC first need to clean up, in quotes, its books, having transited from what was really a public or statutory corporation to now a common entity that's supposed to operate based on the principles of the market? Have they actually, even when a company, this is a private company I'm speaking of now, wants to either raise funding or wants to do some sort of major M&A activities, if he undertakes that, there's a whole lot of internal arrangements that are done to situate the company in the best position, even in terms of the pricing of the shares, to attract value to that company. I suppose that's what's going on at the moment. And it may take a couple of, but I suspect that 2025 is going to be the defining year. So if I were to project, I think we're going to see something happen nobody should hold me to the word, but I think we're likely to see something happen in 2025 because there's been building up, the momentum is being built up.
I mean, you're saying nobody should, but at least you're saying
not
there's something significant.
answer to the question.
Okay. No. Some significant steps that at least to show that it's beginning to realize that it has to be financialized, like leverage the markets, something like that. Is that what we're anticipating?
Certainly. There are significant advantages to leveraging the benefits in the capital market. And if not for anything else, that ability to diversify sources of raising capital, it's something, and even diversify risk is something that NNPC should take advantage of. It goes without saying. But the manner in which it's to be done, the volume of shares that's going to be floated, and the exact timing of that entry into the market are key things that I think is best suited for the experts to determine.
Yeah, all experts, all hands has to be on deck for this. I mean, just recently, Saudi Aramco, we just saw about $12 billion realized in terms of some bonds. Again, activities in the market from Saudi Aramco. That's massive. Imagine that adding up to Nigeria's reserve, even if it's net reserves, you can know how it will impact the foreign exchange markets at this time. So we'll keep an eye on NNPCL and, of course, the quest to leverage the market. It's very important for transparency, accountability, and efficiency at this time. But let's look at 2024. I mean, very interesting year. We saw divestments from some IOCs from the onshore space, the going more to the offshore, deep waters. But of course, we've seen the entry of indigenous oil companies. We saw Wando and of course Eni acquisition. We also saw the consummation and consent of the petroleum minister, who was as president, to the ExxonMobil and Seplat transaction. And we understand that the minister has given the go-ahead for Renaissance to push for the Shell Petroleum Development Company transaction. So let's see what Shell says on their side. But looking at these interesting developments from the oil and gas space, experts have said that this indigenous oil and gas companies is a good thing. It's a good thing. I'm so excited seeing this. But there's need for building the capacity of our oil and gas companies, indigenous oil and gas companies, to achieve scale. So they're looking at recapitalizing the oil and gas companies, indigenous oil and gas companies. Do you support that? What's your take first on this divestment and entry of indigenous oil and gas companies? And do you support the regulator, the NUPRC, bringing on board what you call a recapitalization model, whereby, I don't know how much they will agree, 500 billion, 200 billion, just to be able to achieve scale in the industry?
Yes, your question has three ambits to it. The very first one has a very easy answer. Do I agree with, what do I think about the entire M&A activities? It's absolutely fantastic. It's what we've always prayed for. It's what we've always worked for, and it's something that we're excited to have been part of, all Nigerians. I'm not just speaking on the part of the advisors. It's something that's long overdue. So we're happy it's happening now. So that's all I can say about that. It's all positives for me. A few people have expressed sentiments around the fact that some of the assets may have been getting to the end of their producing life, and that's natural. But again, it's a function of ability to interject the discipline, the technology, and the funding to be able to get some of the assets to produce. So that's something that can easily be dealt with. But the M&As is a fantastic thing. Now, as it relates to the question of building capacity, yes, I definitely agree. Some of the new acquirers may need to ramp up particularly in terms of technical and management capacity. But there's one point that I think we often miss. Even for the IOCs who divested, particularly given the recent, over the last decade, very aggressive push of the local content agency, NCDMA, a good number of Nigerians were working in those companies. Significant number of Nigerians, yes. And those Nigerians, I can tell you for free, they're very experienced professionals who've been in the industry for several years. So it's not the case that all those industries, all those professionals are going to, go to, just zoom away into thin air. A good number of those people will then transit, and assume, and we've seen it happen in a number of the assets that were acquired, will transit to become staff of some of the people who have bought some of these assets. Yes, there will be a whole lot of scaling down, but that value is still out there. That personnel, that human capital is still out there in the market, and it's continuing to be out there in the market. So it's not as if Nigeria will suddenly start from some zero, where you have people who don't understand the oil industry taking over assets from IOCs. That's not the case, because the IOCs didn't work only by themselves. They have Nigerians professionals who are working with them, and those professionals and the skills, the technical competence, and more importantly, the experience that they bring to bear will continue to be available to the people who have bought the assets. So yes, while we think that the need for growth has to continue, there are emerging technologies, emerging ways of doing things. So we need to continue to chase the market. But at the same time, it's not necessarily the picture that's been painted that sort of gives the impression that we are all the indigenous companies are all newbies in the market. No. And if you go behind the veil to diligence the people who are working, or the project proponents for these new companies, you see a lot of professionals, long-standing professionals in the sector, are the people behind these companies. So the transitioning, yes, there might be a few hiccups, but I foresee that very quickly they should be in a position to ramp up. Even if they do not have that internal capacity in terms of direct hiring, there's all sorts of arrangements where they can build, sort of solicit for technical support, have arrangements to have technical partners. So that can easily be done. Now, in terms of raising capital, that's usually the hardest part, and often not, the push is to get the new people to raise capital. But it's also important to take several things into consideration. These new guys have to operate in this market. In the first instance, they first needed to raise significant sums of capital to acquire the assets. After acquiring the assets, they need to then provision for the significant, volumes of liabilities, some of the existing liabilities that they might take on from those assets. Provisioning has to be made for that under the law. Then they need to work the assets. For some of the new assets, the PPLs, for example, you have within a period of 1 year for you to be able to at least have your work your wells and start operations. So yes, I understand the need for them to ramp up, to look for the capital, but at the same time, the push, even from the regulatory side, has to be tempered with what I call, commercial realism, and the fact that it's one market. These people are going to be assessing one market for financing. These guys are going to be leveraging the assets that they have to raise financing. So any useful accommodations that can be made we don't want people to get lazy onto rest on assets as happened over the last several years, no. But any useful accommodation that can be made and flexibilities, even if it's to defer, for example, there are proposals or you see the principles relating to deferral of, for example, of signature bonuses, etc. All those are useful mechanisms to create a bit of flexibility for them to get into the market. That sector is highly capital intensive, even from the other significantly less capital intensive sectors of the Nigerian market. Many operators can't cope. So it's not as if the oil and gas sector will suddenly begin to drive exceeding. I know, yes, it's a dollar-run sector, but at the same time,
so it's about commercial realization.
Exactly, has to come in to enable them to be able to then pick up, ramp up production that they can then leverage on the existing production and then boost production and incrementally grow the profile of those companies.
Okay, Chukwuemeka, very, very key word. Commercial realities, very important for regulators to take note of. So, as we assess the impact of the regulation of Nigeria's petroleum downstream sector, of course, last year we saw the Dangote petrochemical, that's petroleum refinery, come on stream fully, and we've seen various activities. It's NNPCL refineries in Port Harcourt and Warri also are beginning to carry out these activities. But I'm just looking at one of the reports from one of our national dailies that said Nigeria imports 31.8 million liters of petrol daily to bridge local refining shortfall. The key thing for me was that it's currently importing 79.5% or 31.8 million liters of premium motor spirit, PMS, also called fuel, to bridge the local refining shortfall, while Nigeria's current daily consumption is approximately 40 million liters daily. So, I mean, Dangote in the whole analysis contributes about 7 million liters, while the NNPCL refineries control 1.2 million liters, bringing the total to 8.2 million liters, which is the shortfall for why we see imports of the. So, I just want to get from you the outlook for domestic refining and the outlook for the PMS price. What are we going to see happen this year in this regard? There's a shortfall, but we've already seen domestic refining, which is a very, very good development now for us.
Yes, I know the numbers you read. If you contrast what the demand is and what the capacity is, sometimes it looks like a bit. It's not a very happy story. But you must remember, even as a full adult, if you get into an accident and you lose your limbs, you get healed, you start rehabilitation. You will first learn to walk with crutches, then learn to walk properly. Then eventually you can then start to do squats. Then you can start jogging. Then you can start running. There's nothing you can't leapfrog that process. So we came out from a situation where we were almost producing nothing. Most of the state-owned refineries were almost comatose. Thankfully, as you're aware, Dangote has come on stream. And yes, it's a 650,000 DPD refinery. So when we hear that, we think, suddenly refined products will flood the whole market. Even when we discuss refined products, that petrochemical plant is not there to produce only PMS. No. Yeah. It's producing a range of products that will come out from the barrels of the crude that is getting. So even if we were operating optimally, which it's not, remember it just started last year, it's continuing to ramp up production. It hasn't gotten to optimal or peak production or refining capacity. So it will take a while before we begin to incrementally see increases in the refining capacity. And even with increases in the refining capacity, once again, not all the refining going on, it's for PMS. PMS is just one product out of the various blends that are going to come out of that plant. Yes, exactly. So it's going to take a while before gradually we begin to see increase in volume. So what we think will happen is if you combine that with the rehabilitation being done to Warri and potentially to Port Harcourt, I know Port Harcourt came on stream, went back again, and hopefully it's coming back on stream again. If you combine all that three, we're going to begin to see a bit of a boost to the refining capacity. I know people have almost written off most of the modular refineries because most of them are not producing PMS. But remember, those refineries were financed and constructed at a time when the pricing for PMS was highly subject to the subsidy regime, and there was no clarity as to what will happen to the prices. But now the government has sort of floated the pricing for PMS, and it's almost been determined based on the market principles. As long as they observe what's been happening for the next couple of years, and that certainty will remain, what they will simply do is simply to recalibrate, and that's what the future of modular refineries. So they will just do a bit of refurbishment, adjust and augment the refining capacity of the refineries. And within a year, a good number of them should be able to then transit to producing PMS. So yes, even though most of them are not doing PMS at the moment, it was a factor of the circumstances that they found at the time that they started operations. But we think that when that certainty in the market is introduced, people are worried that Dangote is going to be a monopoly. It's not possible. The demand significantly exceeds the capacity we have at the moment. So I foresee that a good number of those refineries will then retrofit their modular plants to start producing PMS, and that will again be added to the volumes. So it's good times for Nigeria, and I see us we are quickly or very fast becoming Africa's giant or a global giant in refining.
That's a good way to wrap it, that our pathway to becoming Africa and, of course, a leading global giant in crude oil production and domestic refining is on a very good path. We're on that way. So thank you very much, Mr. Chukwuemeka Osuji, energy analyst, Olaniwun Ajayi legal firm, for this very interesting insights on what we should expect from the oil and gas industry in 2025. We'll keep on track, and then, of course, we'll get back to you to see what's happening as the year unfolds. Thank you once again for the time.
Thank you very much.
To our viewers, if you want to get further insights on this conversation on the outlook for Nigeria's oil and gas industry in 2025, visit the ProShare website displayed on the screen and follow our social media platforms to engage further. Until you come your way again and reach yourself with knowledge of socio-economic developments around you, it is wise. I'm Ottoabasi Abasiekong. Thank you for watching, and bye for now.